A few years ago, buying a house in Austin meant waiving inspections, ignoring budgets, and competing against a dozen cash offers before lunch. Today, that frantic energy has evaporated. The speed of the transaction has changed. To see if this is a temporary dip or a new baseline for the region, we have to look at the volume of homes actually available. This chart from Team Price tracks our active residential listings. You can see how inventory peaked in the summer of 2025 at over 18,000 homes. Since then, the trend line has moved lower, bringing us to just under 17,000 active listings heading into June 2026. We also see this trend in the months of inventory. This graph shows the 2026 supply line holding consistently above the previous 2 years. We are currently sitting between 4.5 and 5.5 months of inventory. For anyone looking to purchase, this level of supply translates to more choices and less pressure than at any point in the last 3 years. With supply staying elevated and inventory counts stabilizing, the Austin market has settled into a normalized, balanced state. Buyers can trade panic for patience, while sellers have to adjust to a world where they no longer dictate every term. To see how these broader trends hit the ground, we need to look at South Austin. This region traditionally offered affordability, but recently it has absorbed the sharpest edge of the market correction. Year-over-year median sale prices in the South have dropped roughly 6%, settling into a range between $425,000 and $494,000, depending on the neighborhood. This creates a direct conflict. Buyers are watching these price drops and expecting massive discounts, while many sellers are attempting to hold on to the valuations their neighbors got back in 2022. To cut through this friction, we are diving into the exclusive June 2026 daily market briefing from Joe Geisler and Team Price Real Estate. Navigating South Austin effectively requires moving past the headlines and looking at the specific data for each neighborhood. If you are an active buyer looking for maximum leverage under $500,000, your target zone is highly specific. You want to look in zip codes like 78745 and 78748. Specifically hunting for homes that have been sitting on the market for more than 30 days. Targeting these stale listings flips the power dynamic. In these pockets, homes are closing at a 97 to 98% sale-to-list ratio, and sellers are frequently offering concessions to move the property. There is a required trade-off to get this leverage. You have to be willing to accept aging 1990s-era housing stock that requires aesthetic updates to bring it into the current decade. Because inventory is elevated, your inspection is a tool for negotiation. You can demand thorough repairs for major issues, or ask the seller to cover closing costs. With interest rates holding in the mid to high 6% range, you can use those seller concessions to buy down your mortgage rate. That move directly lowers your monthly payment. But do not assume you have this power everywhere. Updated, move-in ready homes in highly desirable pockets still move quickly. If you find an A-tier property priced correctly, you still need to act decisively. South Austin operates as a collection of micro-markets, each moving at a distinct pace. This table breaks down conditions across Austin zip codes. 78749 is hot. 78745 is warm. Further east, 78747 is cool. These ratings are driven by the sellers per buyer ratio. A low ratio means tight competition. A high ratio means buyers have more leverage. Practically speaking, walking into a cool market like 78747 means stepping into significant oversupply. You will face far less competition and have much more room to negotiate on price and condition. We combine this with the Activity Index, which measures pending sales against active supply. This allows us to see precisely which neighborhoods are merely softening and which are entering a true contraction phase with stalling demand. Simply crossing a boundary line from one zip code to the next dictates whether you are entering a competitive bidding war or a buyer's market. For sellers, the margin for error has disappeared. The most common mistake is pricing based on the peak highs of 2022 rather than actual comparable sales from the last 30 to 60 days. This data reveals a harsh reality. Across the entire MLS, 51.6% of listings have had at least one price drop. When we dig into specific submarkets like Manor and San Marcos, price reductions hit nearly 60% of active inventory. Simply putting a sign in the yard without offering concessions or staging the home leads to buyer paralysis. Those carrying high interest rates are being incredibly selective. The financial cost of carrying a mortgage and taxes on a stagnant listing for 4 months quickly outpaces the upfront cost of realistic pricing and professional preparation. Accurately pricing your home and ensuring move-in ready condition in the first 7 to 21 days is the only reliable way to capture current demand before a listing goes stale. Let's translate this data into a specific action plan based on your profile. If you are a buyer, target homes in 78748 that have sat for over a month. Use your leverage to negotiate closing costs, but accept the catch. You will have to put in the work to update 90s era aesthetics. If you are a seller, price strictly based on the last 30 days of data and ensure the property is completely move-in ready. The catch is letting go of past neighborhood peaks to avoid the cycle of continuous price drops. If you are an investor, focus on multifamily properties and duplexes. Cap rates are improving, and rental demand in South Austin remains a strong bridge for buyers who aren't yet ready to purchase at current rates. Success in the 2026 market means accepting the specific trade-off tied to your situation, rather than fighting against the hard math of the broader data. The data shows an Austin market finding its new baseline. South Austin remains a high-value entry point for the metro, provided you navigate the specific neighborhood splits. If you want to know exactly what the numbers look like on your specific street, reach out to Joe Geisler and Team Price Real Estate for a custom neighborhood deep dive. The window for leverage is open. Let's make sure you use it.